I figured I'd make a quick video going over why I like using 924 and how it's applicable even to some of the alerts. So this was Apple today. This is pre-market, and then here's the open. And as you can see, it got crazy, and it just kind of kept burping up. The reason I wanted to bring this up is I'm playing this, right? So this is when the alert fired. Always, none of this is financial advice. This is just ideas. Hopefully you can build your own upon these. This is how I look at things, I guess, maybe, for context. So, and it kept going, right? Now the question is where, right? And everyone always says, okay, well, where? Because it might keep going up. It might go back up. It might go up higher. And you don't want to be caught in like the meme stock ideology of, you could always go to the moon, right? No. So if you want to be more efficient, mechanical, machine-like in trading, I did share the indicators. They're both for TradingView and Thinkorswim. And I figured I'd talk about this specific one, which is, I like 924 crossovers, right? I'm a big fan of them. As you can tell, there's a little bit of, I guess to me it's easy to read. I don't know, maybe, I'm not going to assume it is for everyone. But basically, the gist of it is, and I'm going to remove the alert. Let's pretend the alert's not there. Let's pretend you woke up and you're like, wow, Apple's moving. And you don't have the fancy schmancy Thinkorswim platform. You're out running errands, having breakfast with your family, something, right? But you just see Apple's moving and for some reason you want a piece of it, right? You're like, I want a piece of that action. Absent, let's say you don't have access to your options flow and all this other fancy stuff, but you have a phone, right? And you want to trade for some dang reason. So it happens to me at least, I don't know. So you open up your phone, and on the phone you can't import all these fancy scripts. So I always have, bare minimum is the 924, two SMAs, right? 9 and 24 in volume, and that's about it for me at least. I don't need all these fancy things that other people add to their charts, on my phone at least. My Thinkorswim is actually cluttered, right? But that's a different story. But on the phone, let's say whether you're playing shares or options, this applies to both. But let's say you for some reason saw this, and this was, oh wow, you're like, I need this, so I need to jump in. So let's say you bought 10 shares. I'm not even gonna pretend anything huge. Let's say you just bought, or one share, who cares? 1 to 10 shares moving along here somewhere. Let's say you got filled somewhere over here. So I would call this in the high 162s, low 163s probably, right? Let's say you bought here, and then you already sat here, right? And now here's the problem that a lot of people will do. They'll set, a stop loss, which is fine. Stop losses are fine, but if you bought up here and you're running too tight of a stop loss, then you're probably going to get stopped out here or here, right? Absent that, you obviously trade how you're used to trading. But let's say you buy your 1 share or 10 shares, whatever, here somewhere. Let's say you didn't stop loss. Let's say you set a wide stop loss, or let's say you just bought blindly and you're like, it's 1 share, right? So for some reason you're like, fuck it. This is my Friday. I know it's not Friday, but this is my YOLO, like my beer money or whatever. So you want to see how far it goes. You're chasing action for whatever reason, which I don't ever think that's wise, but depending on what the flow and all that other information says, now I'm ranting. But here's the deal. Let's say you jumped in, you have your phone, 924 is up. The way you follow it is you watch the candles, and what you want is you don't want the candles to close below the rising. In this case, it's the 9, right? And the minute you have a crossover, it indicates that you're approaching a bearish trend, or probably a reversal of the overall trend. So bearish, bullish, bearish, right? bullish, bouncing, it didn't touch here, bearish, or I mean bullish, continuing, right? Bullish, bullish. And then over here you go dip, and that's full bearish, right? Now going back to here, I'm gonna, like, this is the ideal if you were like a robot trader, perfect trading system type of deal, right? Like, you'd buy at open, obviously, if you knew some sort of, for whatever reason, that it was gonna fly today. If, let's say the algo picked it up somewhere or something, right? There was flow that immediately punched in. So you gotta fill it in over here if you're a machine, right? So you're riding along, bouncing along the 9 is what I would call it here, right? So you notice all these candles are kind of just riding on top of this line that's created by the indicator. Now there are some examples where you will dip below, and I'm assuming when this was trading live, right, this bar filled down to here, but then it got pushed back up with buying, I'm assuming. Now what has to happen here is look for closing of down here on the bar, right? So I would call this like a shave on this one. It didn't really have to, like, it might have opened here and then it just went straight up. So that's, you know, we're fine. Riding along the 9, run along, and it's almost mechanical, like just riding along, bouncing up. And then over here you see the first, I guess, fight, right? So you have this candle that dips down, closes below your 9, but you have your next candle that I'm assuming opened down here, right? I was watching it in a different format. Opened here, and then it got pulled back up to the 9. Now the 9 might act as a resistance there, and if it got rejected, then that initiated a bearish trend, I'm assuming, if it crossed over here, but that didn't happen. The 9 was not the resistance. It started trading on the 9, which is fine. That's crabby sideways. And then you get another move to the upside, and then you're riding the 9 again. So riding the 9 perfectly. And again, if you were some sort of beast machine, you'd be selling over here, right? Before any of this chop happened or anything like that. Or over here even, right? Now, bringing that into context, for example, some of the flow alerts, or in this case, the one this morning, I put it up over here, so this is where it was fired. So I'm not, obviously, again, never financial advice, but if you were to like slap ask, right, then you might get filled on one of these 2 bars. Now I put in what I would call the quote ideal trade. If you're human but trying to keep up with your phone while eating your cereal, not trying to drop your phone in your cereal kind of deal, right? So let's say the alert fired. Let's say you got interested over here, right? So you grab one of these candles here. And the reason I highlighted this one specifically is because it's the one that tested the 9. So let's say this one was already filling up, right? This one didn't touch the 9, this one didn't touch the 9, but this one, right there. So you got that brief moment, and then ideally another one would have been here, but then your underlying shifting up and so forth. Another one here, but the underlying's again higher, etc., etc. So the ideal alert was there. Ideal buy-in would have been there, again, if you're doing really good that day or whatever happens to be the case. And then if you're watching, again, eating your breakfast or whatever, you would have seen this candle here. Again, this one's fine. Why? Because if you're watching it live, again, I'm assuming, because I watched a different viewpoint, but it dunks down, right? But then the next one immediately starts filling up. I mean, if you get scared or whatever, I don't know, you could have gotten out there, but then the next one immediately, and this is 1 minute, right? So obviously in your ATS, you're going to see this fly by faster, and you're going to see the orders come in and all that good jazz. And if you have an options flow, you're going to see that. So you get up here to these levels. And the one thing I want to be noticed right now is, you notice it was wide here, the 924, both the lines. But over here, it's trying to do what I call pinching. So it's the top one's curving down and the bottom one's curving up to meet it. So it looks like we're about to get a reversal or a bearish trend, right? So ideally, this candle, so you had a couple signs here. So this first, you know, area of, I guess you could say, challenging the 9. Then you had this one. And to be honest, one of these 3 candles would have been ideally the signal, because sometimes I look at the 3 minute, which is, same thing applies. It's looking a little different, obviously. If you notice, some of them cut deeper, and it doesn't always ride perfectly on the 9. But if you look up here, it will pinch faster, I guess you could say, and tighter. So you get different signals going on, obviously depending on the time frame that you're using. But here's the one in question, I guess you could say. And over here, this one in the 3 minute, which I was referencing, this one would have been the alert per se. The, oh my god, like, I need to start figuring shit out. Because if you notice, the other one didn't touch on the 3 minute. This is why I like looking at different time frames as I'm trading. But I like, I've been a fan of 3 minute lately, and 15 minute is usually my go-to. But so here, this one didn't touch, right? But this one, and that should have been like, after this, it's gonna get a lot harder to trade upward, I guess, unless, again, your flow or whatever under other indicators are showing you that it still has that room for that. Now, that being said, I wanted to see if I can get back to it first. Again, if you're running the indicator kit that I shared, then you'll see that this is the selling point of the 924 closing. Now, all said and done, like, that's still not shabby. If you happen, let's say you slapped ass for whatever reason, I do it sometimes, who cares? Up to here, that's still, a good move. On your one share, that's, not impressive, I guess. But if you're running contracts or whatnot, and you were banking on it, I don't know, let's say, in this case, I think it was a 165 contract, so it got you into money and change, right? Obviously, you could have been a perfect machine and sold up here and gotten more, but even over here is decent, that's nice. That being said, the human trader in me, if I were watching it live, would have said somewhere around here. Now, you could always, if it's a contract, obviously never financial advice, but you could put it at a price up here somewhere. Not fully up here because it's starting to trend down, but somewhere like around here, in this, where this last candle maybe was, and this spin was. And you might get, if you let it run, you might get filled before it runs up to here, just because someone really wants your contract. Maybe someone else is really bullish if it's a call and you're trying to sell it, or whatever it may be, the condition. But once the pinch happens, you're going to notice it is confirmed, and then it's going to bounce what I call under the 9, right? And then you got to wait for another breakout, which over here it starts bouncing above the 9, broke the 24, then we have a crossover, and I know it says buy, but that's so brief because it's on the 1 minute that it's a fake out, as they call it, not a breakout, right? That being said, with the toolkit I shared, it looks a lot different, which is why I shared it. So turning this on, you'll notice this one fired a little bit later over here, which still, again, all being said and done, something like that, right? Now, the reason why I say to have, this is why I use both, Let's look at the 3 minute. Yeah, it's closing over here even lower. So I think the TDA one is, it updates even faster, well, depending on what you're running, but on the kit for me, it updates faster because obviously the data is a little faster than TradingView. This is why, like I said, if you're trading from your phone, 924 is a good one to throw on because it's just there. Like, you can build it really quickly. If by chance you were at your desk or on Thinkorswim, whatever, you would have other indicators to go by as well. So if you happen to have 924 and this one as well, but then you see this sign of weakness. So over here it dipped down to one time out of the channel of CRSI, the cyclical smooth one, which was this moment of weakness. But then it managed to get back up into the channel. Now the minute this testing was of the floor of the current channel, that last bar would have been a good time to cut, obviously. And the reason why is it's already challenging. The minute it falls out, it's starting to show bearish, and it goes really deep out of channel. Tries to get back into channel, and then it continues falling out. Sure, it gets back into channel here, but if you notice, the top end of the channel has fallen off significantly, and the bottom end of the channel has pulled down significantly. So that's going to mean that the movement upward is now limited until the bottom end of the CRSI pulls back up again, which I don't know if it ever did. The rest, I don't believe so. But yeah, I figured I'd talk about why I like 924. It's really, I don't know. I think of the, maybe it's the kid in me sometimes. I think of this as like a little cart in a roller coaster just riding along the track, right? I guess is the easy way of looking at it. And the minute it might go under, in this case over here, is the part where obviously you need to reconsider, I guess, your position if you're long, or, I mean, for a bear, that'd be in a position to go bearish, right? But again, never financial advice. I wish all of you good luck trading, and I hope this was helpful.